Traders Corner is proudly brought to you by IG, the specialists in CFD trading.
Welcome back and welcome to Traders Corner. As always, I'm joined by Garth McKenzie, founder and editor of Traders Corner. Garth, welcome.
Hi, Juliet.
Garth, it's been quite an, if not difficult week, just a week where the market has lacked a bit of direction. But there's been one sort of minor theme emerging, and that seems to be the resources doing okay at the expense of industrials, financials. So I know that you want to flesh this out by looking at what's actually happening on the top 40 at the moment.
Yes, okay. Well, I mean, I'll show you the chart of the top 40, but as you correctly say, there's a bit of a dispersion in the sectors of the market at the moment, which we can talk about in a second. If you have a look at the chart of the top 40 index, which is up on the screen at the moment, I just want to bring this up in terms of a bigger picture, just to show you where we're at in terms of the broader market.
Sure.
And what's quite evident is that we still are basically in this large range between 41,500 and 47,200. And we've bumped up against that overhead resistance a number of times over the last couple of weeks. We bumped up against it again last week, Thursday, on the futures closeout, and then the market sold down a bit into the end of the day after that. But nonetheless, we keep bumping up against that area. And I guess the question at the moment is, are we going to have another go at this resistance and break through it, or do we stay range bound? On a more sort of shorter term time frame, there's also that support down below there at 45,500. So you can say that for the moment, I suppose our market is sandwiched between resistance at 47,200 and support at 45,500. And we need to see how the market works within that range, whether it breaks out to the top side or whether it goes and has another visit down towards the bottom. It is a bit choppy at the moment. And as you rightly said, recently, and I'm talking in the last week or two, we have noticed the flavor or the appetite rather picking up for the resources shares slightly at the expense of the financial and industrial shares. And we've always been big pundits of financial and industrial stocks on this show because they've been the strongest sector in the market, and that's where we've made a lot of money. But we haven't seen those shares following through recently. We've looked at breakouts which haven't really followed through in the Findy sector. So, and at the same time, the resource shares have been picking up a bit. And the question is, I guess, is this theme going to have legs or not? Or is it just a short-term thing? And it's difficult for me to say, but I certainly don't think the bigger picture is telling us yet that the game is over for the financial and industrial stocks. Not at all. I think that's still going to be the biggest game and going forward. But you obviously do have short-term periods like we're seeing now where the resources do outperform. Well,
because you sort of need either the resources to do unbelievably well to actually take us through those resistance levels, or the whole market has got to go up. Because if there's just switching from industrials and financials to resources, which are so bummed out and beaten up, that there's just money shifting within the market. So one can understand that, I suppose, it is within a range and it's not going to move out of that.
Very much so. And this has been a fairly common theme for a while now in our market, where the weighting between the sort of the financial and industrial sector relative to the resource sector is more or less equal in the top 40. If we go back a number of years, the resources shares used to make up a very large weighting in our market. That's no longer the case. So what we've had over the last quite a while really is we've had weak resources but very strong domestic stocks, and the two weigh 50-50 in terms of our top 40 index. So they're two very different sectors of the market. And when you can actually say quite feasibly we've had a bear market in the resources sector for a number of years, whereas we've had a very strong bull market in the financial and industrial space.
And within that, in a couple of shares like Naspers, for example, or Capitec, today especially having an unbelievable day. Garth, but just in light of that, are you still happy to have, I suppose, added the protection that you did last week by the opening of a new option structure for the portfolio?
Yes, very much so. In fact, I mean, if we look there, that area that I've just circled over there is illustrating where we have options protection. We did that option structure on last week's show, so we're not going to go into it again today. But if viewers do want to go and have a look at how we created some downside protection for us, you can have a look at the previous videos either on the Business Day website or on traderscorner.co.za, and we have all the videos of this show there as well. And last week's show, which was the 17th of March, we detailed the option structure that we've created in order to give us downside protection in the event of a pullback.
Okay, well, I suppose there has to be some catalyst, so who knows where it's going to come from. Garth, but one share that has been very strong in the industrial sector has been Aspen until the last week or so, the last 10 days. And I know that that is the stock that you'd like to focus on this evening.
Yes, that's right. right, so we're actually just going to point this out this week. We're watching it. I'm looking to potentially put on a trade here, but I haven't done so as yet. And I'll talk to you about why, and why it interests me. As you correctly pointed out, this has been one of the strongest shares in our market over the last couple of years, and it remains very strong. And if you have a look at that long-term chart over there, now that chart goes back to 2011, so we're talking about 4 years worth of trading action. You can see quite clearly there's a very well-defined upward trend over there, and that uptrend joins all the significant low points that we've seen on this share price, where it pulls back over time. And what's interesting is that right now we're actually seeing it testing that long-term uptrend. The long-term uptrend comes in at about 370 Rand. It's traded down today to about 364, and it seems to be reversing up as we sit here right now. So to me, that's a good sign. Often you do find that there's a bit of noise around these support levels. So yes, the uptrend comes in at 370. Perhaps it pierces a little bit through that level and then reverses back up. That certainly seems to be what we're seeing today. So we're watching this very carefully. But I want to talk about it for a number of reasons, and also to address the recent weakness that we've seen in the share price and why has this come about. So let's dig into that a little bit deeper.
Okay.
Now this chart that I've got on the screen now goes back about 6 or 7 months, and you can see certainly over the last 2 months or so we've seen the share price trading down from nearly 450, as I said today, trading down at about 364. So that's very nearly a 20% correction in the share price, which is a healthy correction in one of the strongest shares and one of the bluest of blue chip shares on the JSE. So that's quite a nice healthy correction. But what has brought this about? Well, a couple of things. We've recently had an announcement that GlaxoSmithKline, who used to own 18% of Aspen, they've gradually been reducing their stake. In November last year, they reduced it by 6%. So in other words, they went from 18% down to 12% shareholding in Aspen. And now recently, in the last 10 days or so, in fact, on the 12th of March, they announced a book build in which they were going to sell down another half of their current stake. So they own 12%, so that means they was therefore sold down 6% of the company.
Which is a big chunk to be selling all at one go.
It's a huge chunk. It works out at over 11 billion Rand. And they do this through what is referred to as an accelerated book build process. And I want to dig into this a little bit more, explain what it is. And really, for a large shareholder like GlaxoSmithKline to exit a stake that size, 6% of the company, they simply couldn't do that through the ordinary market.
Yeah.
It would take them ages and ages to sell that many shares day by day by day into the market. And eventually the market would get wind of the fact that they're doing this and that there's an overhang of shares in the market, and it would depress the price. So what typically they do is they will make an announcement and then go to 1 or 2 or 3 large investment banks and say, look, we've got this line of shares that we're wanting to exit, and we need you to go out and find buyers for us. And in this case, the announcement came out on the evening of the 12th of March after the market closed, and by the next morning, literally before the JSE opened, that line of stock, 6% of Aspen, had been placed. And we're talking, as I said, about 11 billion Rand worth of shares here.
So that does go to show just how valuable Aspen is and how much people want it. Because if it would have taken a lot longer, presumably, if this is an Anglo Gold Ashanti, just for example.
For sure, yes, that's right. But also don't forget that these things happen at a discounted price. Yeah. Because it's a large line of stock. At the time, the shares were trading at around about 400 Rand odd. These shares in the book build were placed at 372 Rand. And they were placed with a variety of institutions and hedge funds and whatnot. Basically large shareholders with very, very deep very, very deep pockets that have the ability to take up that amount of stock very quickly.
Yeah.
So what it really boiled down to is that we saw 11 billion Rands worth of shares changing hands at 372 Rand. You can see the volume spike illustrated on the chart there. That was the day that the book build happened. There's around about 65 million shares that effectively changed hands on that day. It's being sold by GlaxoSmithKline and sold on to a whole bunch of new institutional shareholders. Now, what typically happens is that we've noticed in the past that when a book build like this happens, because the share price, the shares are placed at a discount to the prevailing market price, it does create a little bit of short-term oversupply in the market. And the reality is that all those new shares that have been now placed at 372 Rand, when the shares were trading up at around about 400 Rand, it meant that there was approximately 500 million Rand worth of profit sitting out there in the market with all these new shareholders that have just taken up the shares at a discounted price. So it's quite normal to expect that there will be some profit taking in the shares following that. And for this reason, we've thought for the last week or so that the shares of Aspen will come down towards the 372 Rand level. And as it turns out, they've actually gone below that level today for a while. But I want to take a look at this in another aspect, because remember I mentioned that GlaxoSmithKline also sold down some of their stake in November 2013. So let's have a look at what happened there. Now, at that stage, the shares were placed at 250 Rand each. All right, so it was a long time ago. Previously, the shares had been trading at around about 270 Rand. They were placed in the book build at a discounted price of 250 Rand. Now, what you can see there, obviously there we've got the big volume spike, with it, which is where that big basket of shares went through the market. Notice how the share price did trade down to 250, but it actually found that level acted as support on a number of occasions. And typically this is what happens. You'll find that book build price often actually does create a little bit of a short-term floor in the share price. And it certainly did on that occasion. You can see how 250 Rand marked a strong support level there. The share price did bounce. Eventually it came back and it did pierce below the book build price, but not for very long. And it reversed up aggressively from that level, and that really was your big buying opportunity when it reversed back up from there. So in light of that, we're kind of looking at what happened in November 2013 and looking at this current situation with the book build now, knowing that we've now seen some profit taking and the shares of Aspen have been sold down to fairly discounted levels. We're looking for a reversal to get on board here.
I mean, Garth, are you fairly confident that it's a very similar situation, almost as far as the amount of shares sold, but market conditions are obviously different between now and what they were in November 2013. But do you still think that the subsequent action is likely to mirror what happened back then?
I think it's quite similar. You know, they say that history doesn't always repeat itself, but it does often rhyme. And I think that's the case here. And I think we are likely to see history rhyming in this instance. The supply and demand dynamics are very much the same as what we saw back then. Look, to say two more things, or one more thing, we have noticed over the last day or so that there have been two downgrades of Aspen, one by Avior Research and one by Bank of America Merrill Lynch. They've downgraded Aspen to underperform. Now, that's interesting, and it's a great disparity with what many other research houses in the market are seeing. I mean, I've seen other research houses which think, you know, target prices of upwards of 500 Rand a share. So it depends on who you want to believe. For me personally, as a short-term trader, I look at this and I say, this is a great company. The shares have been sold down almost 20% in a fairly short space of time. We know the reason. We know that there's a short-term overhang of stock in the market. If we see a reversal up, the likelihood is that it's probably been overdone and that there's likely to be an oversold bounce in this share price. Yeah.
Okay, but Garth, you haven't entered a trade, so you're still watching. So do you think you might get a little bit of a flush even below, well, actually today, I mean, 376 Rand, I think today is the high, certainly this afternoon. Yeah. So would you like to wait just for a little bit before you might enter a trade?
I think that we could very well be seeing the reversal today, actually, while we're recording this show at the moment. So there's a fair chance that we're going to go and actually buy this now when we exit the studio, or sometime during the week now. I'll watch it and I'll see. We want to see a very clear reversal up from the sort of 360, 370 sort of area. And you can see I've circled it over there. What I've actually circled is an area where the 200-day moving average comes in. And that 200-day moving average is actually at 362 Rand a share.
Okay.
So I think any clear reversal from that sort of area, we'll look to buy. And it does look as if we might be starting to see that reversal today.
Well, yeah, taking place as we speak. Garth, so that's where we leave it. Well, before we do, let's have a quick look at what the state of the portfolio is from last week. Not too much change, I imagine.
No, it hasn't really moved much in the last couple of weeks. Those are the trades that we've opened recently. So we've got our Pioneer Food and Zeda pairs trade still open, still not really doing much for us, but I'm comfortable to sit with it for now. Last week we took a healthy profit in Telkom, and then we've got that option structure out to June, which we've paid away at 2,500 Rand premium, and I'm happy to sit with that working in the background. So all in all, we're up almost 19% for the year to date as we approach the end of the first quarter. I think it's a pretty good performance.
Yeah, let's hope we can do that every quarter. Garth, we'll leave it there, and we'll see you next week Tuesday. Thanks as always for joining us. That's Garth McKenzie, founder and editor of Traders Corner.
Traders Corner is proudly brought to you by IG, the specialists in CFD trading.